If you are looking to purchase a new home, it's important to have insight on what mortgage rates look like, their interest rates look like right now for the rest of the year. And joining us today with all the facts is branch manager of North Point Bank, Zachary Levesque. Thanks so much for being here today.
Great to be here again.
So we were chit-chatting a little bit before we came on, and so let's just kind of get right into it.
Yeah.
So the recent Fed meeting, talk to us about what the interest rates look like now for the rest of the year. A lot of people right now, you have people looking to buy homes. People are wondering, what's going on?
Yeah, so the recent Fed meeting, it was kind of priced in. People expected it. The Fed actually paused the raise in the discount rate. And when the Fed raises rates or lowers rates, it's not directly lowering or raising mortgage rates. It's really the rate that banks borrow from other banks, but it has effects on credit card rates, car rates, and mortgage rates. So that's why we really pay attention to that. So the Fed did pause, which was a good sign, but this week the Fed chief, Jerome Powell, announced that over the next two meetings, we might see consecutive rate raises, which is not really good news for interest rates.
Okay, now when you have people coming into the bank, do you have your customers wondering about that? Is that something that's very top of mind?
Yeah, the top of mind in our world is interest rates, inflation, and recession. Those are the three buzzwords.
Those are three buzzwords.
And they kind of all go together because most people believe if you track economic data over the last couple of decades, usually when we go into a recession, interest rates come down.
Okay.
So that's kind of what people are expecting to happen, but nobody knows when that will happen. And it's certainly not going to happen if we continue to get rate raises from the Fed.
Now, what about after 2023? Is it too much for me to even wonder that people know how it's going to be consistently moving?
Yeah, I think so. The problem with what's going on right now, it's unprecedented. And the reason why we're seeing all these effects is because of COVID and how low interest rates and how there was so uncertainty when that happened, which forced interest rates to historic lows. So there's no data to really look at. But most economic indicators, professionals believe that in 2024, rates will come down.
Okay.
I wouldn't say aggressively, but there's a lot of indicators that expect rates to go down into the sixes, some even into the high fives. Now, I'm not saying that's going to happen.
He's not saying that's going to happen.
Not saying that's going to happen, but most indicators point to the fact that we're going to see lower interest rates in 2024. And personally, I do believe that we'll see that as well.
You do believe? Now tell me this, because I have a son who's 19. He's always looking at what's going on. Do you find that a lot of the customers coming in, even as they're younger, because they're just, maybe it's just more common that we're talking about this now? Do you feel like the younger customer is very much in the know?
Absolutely, and it's a really good point that you make. And I think a lot of that has to do with social media. People pay attention to trends. Home ownership is a hot button, and we're seeing younger people purchase homes. We're seeing younger people become investment property owners with Airbnb, rental income, et cetera.
Oh, that's a good point.
The really good thing about this is if you look 10 to 12 years ago, most homeowners or potential homeowners weren't as educated as they are now, because information right now is at our fingertips. So I think it's a really good thing for everybody.
No, great to know, Zach. Always great seeing you. Thanks for coming in. I finally got to do a segment with you.
Let's do another.
Let's do another. You can find more information on mortgage interest rates and also anything else which Zach was just talking about over at our website, rhoadshow.com.